Yo, what's up you guys? Welcome back to another video. Today I will give you guys an update. We're going to dissect the Federal Reserve minutes and I'll simplify it for you so that you can understand what it means and how we can apply it in the market as well. Now, without any further ado, let's jump straight into it. Now, Jerome Powell came through yesterday. As we know, it was the Federal Reserve meeting minutes. However, the Feds didn't give any indication whether or not they are going to hike the interest rates or whether they're going to cut the interest rates or not. However, what we do know is, firstly, last month we saw that the CPI data that is used to measure inflation, which gives investors an indication of whether or not the Feds are going to hike the interest rate or not, came through much lower than expected. Now, how does this work? It basically means that when inflation shows signs of cooling down, the Federal Reserve is less likely to hike the interest rates. Now, which is probably why Jerome Powell came out yesterday and couldn't give us an indication of whether or not the Feds were going to hike the interest rate or not, purely because we had some low inflation data, and the expectation where we are now is obviously for the Feds to hike the interest rates, to not hike the interest rates because there were some signs of inflation cooling down. Now, if we go through the article, you'll see that the Fed's officials at their most recent meeting expressed little appetite for cutting interest rates anytime soon. Now, they didn't directly say it, but they have expressed that they are less likely to cut interest rates. Now, remember, there's two things that the Feds can do. In fact, there's three things. They can hike the interest rates, which will boost and increase the value of the dollar index. Number two, they can keep the interest rates at a stable rate, which is not always good for the index, or they can lower the interest rates, which will drop the prices of the dollar index. And by definition, that would drive stock prices higher and that would weaken the dollar. As it stands now, the Feds are probably stuck between whether they should lower the interest rate or whether they should keep it at a stable rate. Now, because of the low inflation that we had last month, I do not foresee the Feds hiking the interest rates. The Feds could potentially leave it where it is now, or they could potentially lower it. It says here, they said the policy will need to stay restrictive until data shows inflation on a convincing track back to the central bank's 2% goal. Now, the target for the central bank is to keep it at 2%, or is to bring it down to 2%. And you can see that we are coming very close to that numbers, considering where we were a couple of months ago, sitting at, I think, 7.5 or even 8% at some points there as well. Now, the way as it seems now, there was no mention of interest rate cuts. So the Feds did not indicate whether they're going to hike the interest rates or not. Right now, the Federal Reserve for the interest rate is sitting at 5.25 as we know it, but they say that their current target in a range between 5.25 to 5.5%, and this is the highest level that it's been in the past 22 years. We know that interest rate is quite high in the US, but like I said, whether the Feds are going to hike the interest rate next month or not is less likely to happen, and I do not see the Feds hiking the interest rate. I do expect the Feds to keep it stable because I clearly don't see any reason why they should go and hike interest rates as well. It says here the Fed's key inflation indicator, the personal consumption expenditure price index, they're showing core inflation running at a 3.7 in September. The number has improved considerably, dropping a full percentage since May, but it is still not where the Fed wants it to be. Now, remember, they are giving us some sort of an indication that they are doing well with bringing down inflation, but it is not enough for the Feds to bring down the interest rate. I do expect the Feds to keep their interest rate as stable. And if you did follow the analysis that I did yesterday, you'd have probably caught that sell on the NASDAQ from there. There you can see was no movement. You would have probably caught the buy on DXY. You would have probably also not catch anything here because I'm still waiting for this, but you would have probably caught this. Well, that's a short sell. And then we obviously have the index, sorry, gold. Gold started moving higher, but more of the Nasdaq. We can see the Nasdaq pulled down exactly as anticipated. Now, I know there's a lot of mentors and people who send signals, who use my setups to send to their people, but that is okay. I love educating people. I love waking up, seeing people use my analysis, and sell it and say it's their own. It's beautiful. I love it. It's free education. As it stands now, we're going to wait for the Feds to come through to see whether or not they're going to hike the interest rate or not next month. But from here, I do expect the stock market to continue higher. I expect the index to continue lower. But for now, like I said, we have almost reached our target. I do still expect the market to continue higher and then pull back. Excuse me. The Nasdaq also going to continue higher. And whoever said that there's a stock market crash is going to come. But any case, thank you for your time. And as always, cheers for years.